The market has started off the week pretty red, but in today's video, I'm going to take you guys through exactly why now could be the biggest mistake of your life when it comes to selling. Okay guys, what is up? We have started a brand new week. We're now in the second week of March and we've got some key charts to be looking at in today's video. Now, before we do start, you guys leave me a comment to let me know how you're feeling about your portfolio. Are you ready to sell your altcoins and just pack it in for this bull run? Do you think the bull run's over? Let us know in the comment section. Now, we've been tracking the Ethereum chart on the channel for many months now, and we had this lower target at around 1.7k as a potential bottom for the price of Ethereum. Now, while the market is super volatile at the moment, I do think we are coming very close to the bottom of this pullback, guys. There actually are some bullish divergences showing up in the chart, which I'm going to show you guys in a second. But Ethereum looks like it has another 15% down to the bottom area of this channel. And even if we do hit that 15% lower over the next week, over the next 2 weeks to month, this is still technically going to be in a larger bullish structure. So yes, our altcoins are bleeding. Yes, our Ethereum position is bleeding. However, the charts are telling me that it would be malpractice to be selling at the absolute lows. Now, you go on to CoinMarketCap and you can see here that we really are in extreme fear. If you go to all-time chart, you can see we're nearly in the most fearful times we've ever been in, according to CoinMarketCap. Remember, this only goes back 2 years. But the reason for that, guys, is going to be because when you come to the main page of CoinMarketCap, a lot of top altcoins are now giving back gains or actually printing lower lows than what they did maybe in the bear market, right? So you're seeing things like Polygon Matic at 20 cents, things like Arbitrum, okay? This thing was at 40 cents at inception. It's now at 33 cents, okay? Render, another top project, picking it up from $1.80 at bear market lows, is nearly back at those prices. So of course there's going to be a lot of pain in the market, and I'm sure there's going to be a lot of investors now who are pretty much giving up with the hopes of an altcoin season. Now, something to keep an eye on is going to be the Binance BTC liquidation heat map, guys. And yes, we're getting a bit more serious in today's video because there's a lot of blood in the streets. Now, if you go to the 3-month chart, then what you're going to see, guys, that there actually is a lot of liquidity above us. We've got some pockets at around 90k, which aren't going to show. You've got a big pocket at 100k and then a massive pocket of liquidity at the previous all-time high at 110k. So while we may continue our short-term bearish movements, it makes sense to be pushing up in the mid-range to be trying to collect that liquidity at around 100 to 110k. Now, I know a lot of people are going to be quite emotional in the market and they're going to think, right, is it time to just get rid of the Ethereum position that we've been building up over the past couple of years? I don't think so. And when you look at big institutional investors, when you look at even people like World Liberty Financial, they're down by 110 million for its 9 investments of cryptocurrencies worth 300 million, nearly $500 million. And that data is coming from Arkham Invest. Now, ETH represents 65% of the total loss. However, these big players are not panic selling their ETH even at 2k. However, the retail are going to be selling, and that is because we're in the most fearful times we've ever been in for the Ethereum chart. And now, while there may be volatility between the 70k region to around the 90k region, there could be a lot of chop, guys. We are printing macro lows on the RSI, and every single time we've visited sub 25 has been at or near a key point of reversal for the Bitcoin chart. So we will have to change our stance when things do structurally break down. But until then, we can't flip bearish, guys. It wouldn't make sense to flip bearish and tell all of you guys to sell your altcoins. Obviously, when that time does come, we will be here to let you guys know that maybe it is time to be thinking about selling your altcoins. If you don't want to miss that, make sure you are subscribed because we have to stay unbiased on the channel. But when you come to bull market support bands, you're going to see that the bottom of the support is going to be around 75k. So we still could print a local bottom sub 80k at some point over the next couple of weeks. And remember, the main thing that we need to be focusing on, guys, is the monthly closes. So it's easy to go onto the 15-minute chart, it's easy to go onto the 4-hourly, the daily, but the monthly chart is going to give us a lot more information that is going to be useful for us macro investors. Not only that, while we are experiencing some downside price action, we have got a CME gap that could be filled, so a small relief up to 86k could be on the cards over the coming week. And something to bear in mind when you do compare the 2016 to 2017 cycle to today's cycle, which a lot of big traders actually are doing, you can see here that right at the end of the cycle was when we saw the most parabolic blow off top price action for Bitcoin, and is where we saw our altcoin season. Okay, it looks like we're at around the same levels as where we were at this point in 2017. Now, not only that, I'm going to take you through into the altcoin chart at the end of the video, so pay attention. But it looks like what we're doing now is retesting a breakout. Okay, so we're retesting a previous break of the all-time highs. And what happens when we do retest this breakout on this descending broadening wedge, there usually is one final push upwards to come, which could bring us to our 1.6 trillion target that we've been targeting for our altcoins. So Bitcoin looks like it's on its way to fill the wick and potentially then some. If we do fill the wick, we're going to be going to 78k for Bitcoin. I think there's going to be a lot of volatility this week, but do remember that even though we are having a downside deviation from this channel, all of this could be noise in the grand scheme of things. We've seen this happen many times before, guys. All of this, if we do close the month back into this zone, back above 87k, then when we do zoom out onto the monthly chart, all it's going to look like, guys, is going to be a massive wick to the downside, right? We've seen it happen time after time after time. If you go back just maybe 6 months, then you guys remember all the way from this time last year up until September of last year, we were in a massive consolidation pattern with wicks to the upside and wicks to the downside. So structurally, we could come down all the way to like 73k, maybe all the way to 71k, and still maintain a bullish price structure. And for our altcoins, we're still in the green zone, which actually does represent the 0.5 fib to the 0.618, which historically over this run has been a massive bottoming out zone and would have been the best risk to reward opportunity for all of the altcoin investors in the market right now. So look, while it's easy to look at the 15-minute chart, the 1-hour chart, the 4-hour chart, we must remember what the bigger picture is. We're in a massive falling wedge for our altcoins, guys. If we do break out of this falling wedge, then again, where is our target going to be? From the bottom area all the way to the top is going to be a massive breakout to around 1.4 trillion, guys. Okay, so maybe we do come a little bit lower and we do break out. 1.3 to 1.4 trillion could still be on the cards for a lot of our top altcoins, and from where we are to the top is going to be a 74% move. Obviously, when you do go into different altcoins, you're going to get more than the 75% move. Okay, so we still are at the final portion of the bull run, in my opinion. We still are at a bottoming out zone for altcoins while we are in a sentiment extreme, which is fear. So again, these times don't feel like the best times to be buying or holding. If you haven't got any dry powder to be buying into the market, then holding until we are out of this sentiment extreme may be your best bet. If we do break down from key structure, which is going to be 685 billion for our altcoins, then we can start to say, you know what, maybe the cycle has topped. But until then, we remain bullish, we remain calm, we remain patient. If you guys want to be managing your emotions with us on the channel, make sure you are subscribed. Let me know which altcoins you're looking at picking up in this accumulation zone. And that's it. I've been Lamar from the Real World Asset Watchlist. I hope everybody has a good week. I hope you will remain patient. I'm going to see you guys in the next video. Take care. Bye-bye.